Beautiful day to talk some real estate. Today is a special day like no other. We are going to see and visit one of my favorite loan officers in Los Angeles right now. And she's also in the top 1% of the country's loan originators, a mortgage lender. She's with Movement Mortgage. Let's go and check her out, see what she has to say. Good afternoon, people. How you doing? My name's Roger Drakes. You know me, Sotheby's International Realty. Special day, special moment. I am here with undoubtedly one of the best there is in the mortgage lending, the loan business, which is so important to our whole industry as a realtor. Not many people know and realize what goes on behind the scenes of, people acquiring funds, money to actually buy these properties I'm always talking about. So here we are with the great, the one and only from Movement Mortgage. This is Natalie Salins.
Hi.
Did I get it right?
Yes.
Okay,
absolutely.
Good to see you. Good to see you again. It's been a while. It's been a minute.
I know.
So thanks for taking time to talk to me real quick.
Absolutely.
It's kind of crazy. I mean, people really still don't quite understand what goes into home buying, and most people are quite scared by the whole thing. That's why I meet so many people. I've had a lease lately, and I meet so many people with so much money coming in, great careers, kind of younger. And I always say to them, why are you renting? Why are you kind of, renting this place? Why don't you just buy to have 20 grand a month, that kind of sum coming in, some of them. And they just don't understand it.
Yeah.
So they're scared of it. Naturally, we are scared of what we don't understand, right?
Mm-hmm.
So I'm here with you today to just, untangle some of the confusion a little bit real quick with a couple simple questions. And then
Sure.
hopefully, it'll help somebody out there. So the first question is, okay, what is a mortgage in 2 or 3 lines?
Great. So a mortgage is a lien. It's a loan that goes against the property.
Right.
So it's a lien that's on title and it's held against the property.
Right. See, and it's funny because people think, why not just call it a loan then? Because it plays a different.
It's a type of loan.
Right. Exactly.
There's all different kinds of loans, right? Everything
right.
that you do on your credit card is a loan. A mortgage is a lien, a little bit different. It is a loan, and it's held against the property.
Right.
But
so
it's a type of loan.
Yeah. So the property is the security for the money.
Yes.
And just like I always say to people, just like when you're renting somewhere, if you don't pay your rent, there are consequences. And it's the same with obviously a loan.
Yes.
If you don't pay it, there are consequences, usually resulting in a similar type of thing, you being, removed from the property at some point, way down the line, of course. But people don't do it, or they're scared of it because they feel that it's like a ball and chain on your leg. It's gonna weigh you down for forever. I'm not gonna be able to travel. I'm not gonna be able to buy stuff, and not because of this loan that's so heavy. So I wanted to ask you, what is the average length of a loan, and how much does it cost? Like, how much do these things cost me?
Well, it depends on what the mortgage is and what the rate is and
right.
what kind of mortgage you're getting. On average, the standard loan is 30 years and it's 360 payments, right? And that's going to be your cheapest way to obtain a loan. I mean, there are some 40-year amortizations, which means they stretch the mortgage out for 40 years. Obviously, the mortgage becomes smaller every month. But most of the time, it's just a 30-year.
Right.
That's where your best rate basically is going to come into play. It's the most conservative traditional loan you can get. But nobody keeps it for 30 years, right? So I think it's something like 94% of people get out of a loan within the first 5 to 7. If you're a first-time home buyer, very, very rarely do people stay in the original 30-year fix that they get.
Right.
I think, how expensive are they? They are however much you want them to be. Wherever your comfort level is what you're going to end up spending.
Right.
Hopefully you still have enough money to still take vacations. You certainly will in a few years down the line when you have the equity that's built up.
Because the first few years is the highest interest, and then it swaps places as you get to the end of the term.
Exactly. An amortization schedule, which is if you're on a 30-year fixed, the loan is amortized. So you basically pay more interest than principal in the beginning of the loan, and then it's a scale. You end up paying more principal, less interest as you make it through
as you're paying it off, yeah. And as Natalie said, most people don't think about being in it for 30 years. They think about being in it for maybe 7 to 10.
Totally.
And properties are doubling in value every 7 to 10, roughly. So
Right.
So it's still a good thing.
It's amazing.
Yeah, it's still amazing.
It is the way to build wealth,
Yeah.
truly. And if you're a W-2 borrower, it is a way to have an incredible tax write-off as well, because it's mortgage interest, which is tax deductible.
Right, and that's segue again. My next question: how does one obtain a loan? Now, obviously, there are many ways, but I just wanted to know the basics of how. What does one need, qualification wise?
So pre-approval.
Yeah.
We look at your credit, your assets for down payment, and your income. Those are the three main things that we look at to qualify you. If you don't have a lot of assets, that's okay. Normally, that's like the least of my concerns, because there are many ways around a very small down payment to even none. We have programs with 0% down. And then the credit, I've got programs where you can have a 580 and still get a loan all the way up to 822,000. Yeah,
Wow.
FHA. Yeah.
5.8. Wow, that's cool.
580, 3.5% down. You can get a loan all the way to 822.
A lot of terms going on here. I'll break down some of the terms and put some things on the video.
It's a type of loan program,
Yeah.
FHA. It means you can have a 580 credit score and get a very, very low rate and put very little money down. It's like a specialty government program.
Right, yeah, which was basically introduced many years ago to help alleviate the pressures of trying to get on the housing ladder and help people.
Exactly.
Yeah.
FHA is the reason why a standard person could get a loan 60 years ago.
I wanted to ask you a question, which is for me as much as everybody else. The question is basically broker versus direct lender. What is the difference there? Because I'm not sure I even understand myself.
Sure. So there are all different types of institutions that lend money for mortgages. So you have a direct lender, which direct isn't the greatest way to say it. So you have a depository lender, which are your Chase, your Cities, your Wells.
Okay.
That's a depository bank because you deposit money there. So that kind of bank has all different purposes. They have a mortgage side, they have a depositing side. They don't just do mortgages. Right. Then you have a mortgage bank, which is what Movement is. Movement, as a mortgage bank, is a direct lender and also brokers to outside investors. We do everything. We can broker it. We can keep it in-house. We even service our own loans. We're an interesting type of mortgage bank. We do kind of it all. Then you have brokers who reach out to all different investors, and it's really, they don't direct lend. They are brokers. Right. They'll reach out to the investor, the investor will fund and direct lend on that. Most of the time, no matter where it goes, as far as who actually direct funds and lends on it, it'll probably get sold to different servicers. So a servicer is just somebody who gives you your mortgage statement every month and maybe takes care of your property taxes and insurance for you. That's a servicer. Again, Movement services its own loans now, which is cool. So we are the servicer. Right. So on all of our conventional loans, we're the ones who are going to keep it and service it. Jumbos will normally go to that investor that we sell it to. Okay. And a jumbo is? Anything over 822,000. Right. That's a jumbo loan, but that's only for 2021. Right. In December, we're going to get new loan limits for Los Angeles. Most likely, based on the inflation this year. That makes sense, yeah. It goes with the price. San Francisco, San Diego, Los Angeles, these counties, of course, are the highest amount, Right. Obviously, since this whole thing, there's a thing called mortgage forbearance for people who have mortgages. What is that exactly? So forbearance, there's two different types of, it's almost like delaying your payments on a mortgage. Two different types is forbearance and deferment. So forbearance is actually when you stop paying the mortgage, and after a certain amount of time, depending on how long the mortgage servicer gives you to be in forbearance, when you're out of forbearance, they make you pay all of the mortgage payments outright to get out of forbearance. You have to make that lump sum payment of all that you owe, all that's remaining, back. Right. Deferment is when you stop making the mortgage payments and they put them on hold for you, and they actually kind of lump the amount that you didn't pay to the back of the loan. Some servicers lately, you're seeing it as like a second loan amount with the first. So if you owed $400,000 and you stopped making your mortgage, which let's say is $4,000 a month, for 5 months, right? So now you owe $20,000. So it's almost like they put it to the back of the loan, except they kind of have a separate amount that needs to be paid off of $20,000 at the end, or if you refinance, it needs to be added back into the loan. And it's like this separate $20,000. That's deferment.
Okay, great. Whole bunch of information there.
I know,
fantastic.
right?
It's good. Yeah, I mean, I'm taking it for myself. How's the market right now? How, if you had to, I know that question is really,
right?
I know, I get it, and I don't want no crystal ball work. I don't want you to.
If I had one, I would use it.
And we'd all be billionaires.
I wouldn't be sitting here.
Yeah, we'd all be billionaires if we knew what was going to happen.
Correct.
For you personally, is it busy right now?
It's busy, yeah. Right, it feels a little slower than it has been through this past year. Okay. Kind of slowed in August a little, and then picked up a little, and now it feels in September a little bit slower. All the kids are back in school. I think people are managing getting back from vacation because everybody went away this summer because they could and they wanted to.
Including me.
Yeah. So I think that it's still competitive, of course, but I think that it's maybe a little less crazy as it was. Yes.
So, thanks for having me today in your wonderful office here at Movement Mortgage.
Yes, thank you for coming.
We've spoken hundreds of times on the phone and sent hundreds of emails, and you're always super efficient. Honestly, I wouldn't even come and ask you if you wasn't one of the best. I'm not bluffing, it's real. So good to see you face to face. Next time, I promise I'll come with some gifts.
No,
because this was your gift. Right, and so if you want to contact Natalie here at Movement Mortgage, make sure you hit her up. I'll put it on the screen somewhere here. And she's always ready to serve and do her thing and make sure you get in a good position to buy in this hard market we're in. And thanks again.
Thank you.
Hopefully see you soon.
I know. Hope to see you soon too.
Bye.
Bye, guys.